Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AZZ Inc. quarterly report. AZZ Inc. market capitalization of $3 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that AZZ Inc. holds a significant advantage in their industry. AZZ Inc. trades at a lower price-to-earnings ratio of 11 times and a higher price-to-book ratio of 2.49 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 53% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets in equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. AZZ Inc. offers a diverse range of businesses and services that cater to various industries. At its core, the company provides metal coating solutions for corrosion protection through hot dip galvanizing, spin galvanizing, powder coating, anodizing, and plating. These solutions are tailored to meet the needs of steel fabrication and other industries. In addition to corrosion protection, AZZ Inc. also offers aesthetic and corrosion protective coatings for steel and aluminum coil. This includes value-added services that cater to specific end markets such as construction, appliance, heating, ventilation and air conditioning, container, transportation, and others. By providing a comprehensive range of solutions, AZZ Inc. has established itself as a leading provider in the industry. The company's extensive portfolio of businesses and services enables it to serve a wide range of customers across various sectors. From corrosion protection to aesthetic coatings, AZZ Inc.'s offerings are designed to meet the unique needs of each industry, making it a trusted partner for many companies. The stock price of AZZ Inc. has experienced a significant increase over the past year, driven by a series of positive news events and strong financial performance. One key event that contributed to this growth was the sale of the Electrical Products Group by AZZ Infrastructure Solutions in March 2025. This transaction provided a substantial boost to AZZ's financials, resulting in $231.4 million in equity earnings from the AZZ joint venture and a $273.2 million cash distribution. Additionally, AZZ Inc.'s strong fiscal year 2025 results, reported in April 2025, showed record full-year sales of $1.577 billion and adjusted diluted earnings per share (EPS) of $5.20. The company also reduced its debt by $110 million, achieving a net leverage ratio below 2.5x. Furthermore, the acquisition of Canton Galvanizing in July 2025 expanded AZZ's metal coatings segment, while the successful refinancing of its Term Loan B in August 2025 saved approximately $3.3 million in annual interest. The company's strong fiscal third quarter 2026 results, reported on January 7, 2026, exceeded Wall Street's expectations, with revenue of $425.7 million and adjusted EPS of $1.52. The metal coating segment was a key driver, with sales increasing by 15.7%. These positive events have contributed to AZZ Inc.'s stock price increase, which has approached and exceeded the 33.22% threshold over the past year. The primary drivers of revenue growth or decline in a company can be attributed to various factors. On the growth side, an increase in sales of electrical distribution products, power generation and transmission equipment, and manufactured solutions in utilities, construction, and consumer industries have contributed significantly. Additionally, the recognition of equity in earnings for the AZZ JV has also boosted revenue. On the other hand, a decrease in sales of water treatment products, negative impact from foreign currency exchange rates, and impairment loss on Avail JV have led to revenue decline. Furthermore, the decline in fair value of investment in joint venture Avail JV has also negatively impacted revenue. It is worth noting that some segments such as Precoat Metals Solutions and Infrastructure have shown no change or decline due to various reasons including interest expense and income tax expense. Overall, these factors highlight the importance of monitoring and managing revenue growth drivers and decline drivers to ensure a company's financial stability and success. And the net income of a company underwent significant changes between 2024 and 2025. On a quarterly basis, net income increased by $41,075 in 3 months ended November 30, 2025 compared to the same period in 2024. This trend continued on a yearly basis, with a 9-month increase of $301,329 from 2024 to 2025. The overall change was a substantial 177% increase. However, not all segments experienced an improvement in profit margins. The metal coating segment saw its profit margin decrease from 0.03% to 9.67%, while the Precoat Metals Solutions segment's profit margin improved from 15.44% to 23.11%. This mixed performance can be attributed to various factors, including a significant loss reported by Precoat Metals that outweighed profits from other segments. A notable contributor to the increase in net income was the gain on sale of Electrical Products Group, which recognized $697.5 million in 2025. Despite this positive impact, cash flows from operating activities decreased, indicating a potential shift in the company's financial dynamics. Overall, the changes in net income and profit margins reflect a complex interplay of factors that require careful analysis to understand their underlying causes. The company's financial performance is a testament to its ability to generate positive operating cash flow. As evident from the provided data, the net cash provided by operating activities for the 9 months ended November 30, 2025, stands at $452,872,000. This significant amount indicates that the company is successfully converting its profits into cash, which is a crucial aspect of any business's financial health. Furthermore, when comparing this figure to the net cash provided by operating activities as of November 30, 2025, which is $123,419, it becomes clear that the company's positive operating cash flow is not a one-time occurrence, but rather a consistent trend. This consistency suggests that the company has established a strong foundation for its financial performance and is well equipped to navigate any future challenges. In conclusion, the company's ability to generate significant positive operating cash flow is a key indicator of its financial stability and success. With a substantial amount of cash being generated from its operations, the company is well positioned to invest in growth initiatives, pay off debts, and reward shareholders, ultimately driving long-term value creation. The company's financial health has shown significant improvement in recent years. A review of the debt level reveals a substantial decrease from $1.3 billion to $374.9 million, indicating a reduction in long-term liabilities. This decline is evident across various reports, including pages 30, 31, and 52. Furthermore, interest expenses have also decreased, with notable reductions reported on pages 2, 45, 46, 51, 58, and 59. The interest expense has been reduced by as much as $19.5 million, indicating a decrease in the company's borrowing costs. Overall, these changes suggest that the company is successfully managing its debt and reducing its financial obligations. Management's outlook for the company is optimistic, with several key initiatives aimed at driving growth and improving financial performance. One of the main drivers of this optimism is the expected reduction in cash tax payments due to the One Big Beautiful Bill Act, which will provide a significant boost to the company's bottom line. In terms of strategy, management is focused on maintaining a strong liquidity position through a combination of cash flows from operating activities and access to debt financing. This will enable the company to fund its capital expenditures, acquisitions, dividend payments, and other general corporate purposes. The company is also investing in new facilities and technologies, including a new coatings facility in Washington, Missouri, which is expected to have a positive impact on operations. Additionally, management believes that the restructuring plan for certain Surface Technologies facilities will improve operational efficiency and financial performance. Looking ahead, management expects growth in demand for manufactured solutions in utilities, construction, and consumer industries, driven by increasing demand for sustainable and efficient products. Overall, the company's strategy is focused on driving growth, improving financial performance, and maintaining a strong liquidity position to support its long-term goals. The company has made several significant acquisitions and divestitures over the past few years. In terms of acquisitions, one notable investment is the joint venture with Avail, which cost the company $58,570. Additionally, the company has equity in earnings from Avail's operations. These investments demonstrate the company's commitment to expanding its reach and capabilities through strategic partnerships. On the other hand, the company has also made several divestitures, resulting in significant gains. The sale of the Electrical Products Group brought in a $697.5 million gain during the second quarter of fiscal 2026. Furthermore, the majority interest in the AIS business was sold to Fernweh Group on September 30, 2022. Perhaps most notably, Avail JVS Electrical Products Group was sold to nVent Electric plc for $975 million in May 2025. These divestitures reflect the company's willingness to adapt and evolve by shedding non-core assets and focusing on more strategic initiatives. The company has a history of paying dividends to its shareholders. This is evident from the various financial reports that explicitly state dividends. Yes, the amount of dividend payments also provides clear evidence of this practice. For instance, in 2025, the company paid out $17,099 and $18,022 in 2024. Furthermore, the 9-month period ending November 30, 2025 saw a payment of $17.1 million, while the same period in 2024 saw a payment of $18 million. These figures demonstrate that the company has consistently paid dividends to its shareholders over the past 2 years. Concerns about inventory buildup are evident in recent data. An analysis of raw material and finished goods inventories reveals a significant increase from November 30 to February 28. This trend suggests that companies may be holding onto more stock than necessary, potentially leading to inefficiencies and wasted resources. Furthermore, an examination of accounts payable also indicates potential issues with inventory buildup. The increase in delayed payments to suppliers during both periods suggests that companies are taking longer to settle their debts, which can contribute to a buildup of inventory as suppliers continue to supply goods without receiving payment. This situation may indicate underlying problems with cash flow management or supply chain efficiency. That concludes the financial summary for AZZ Inc. Feel free to comment below, and I will be happy to answer them when possible.